10 lakh 50,000 crore. Well, this is the net worth of one of the richest billionaire, stock market billionaire in the world. That is nothing but Warren Buffett. You all know him very well, and you know how he has created wealth over the time. Now, today we are going to talk about how the Warren Buffett, the great Warren Buffett, has actually gone through the complete journey of creating such a massive wealth. He started at the age of 11, now he's around 93 plus, and in last 82 years he has created the massive wealth over the time. And what are the rules and principles he has followed to create such a massive wealth? He's an inspiration to all the investors in stock market, and many try to follow the principles of Warren Buffett, even myself. So today I'm going to talk about complete in detail what are framework and what are the rules Mr. Warren Buffett has followed over the years. It will be a very interesting session and video, so please be there till the end because you will get lot of value. So let us start going through each and every principles which Mr. Warren Buffett followed over the time. So talking about the first principle is that Warren Buffett always followed two rules, and he always used to say that rule number one, never lose money, and rule number two, never forget rule number one. And this is the principle which Warren Buffett has followed over the years. Now what he is trying to say, that do not do mistake. Like one of the biggest mistake which retail investors in India do is that they start doing intraday trading, day trading, derivatives, all that to earn quick money. Now you also know that very few are able to really make it through that investing style. Even Nitin Kamath, you know, the Zerodha founder, he told that less than 1% of traders are really able to beat the bank FD. Even SEBI told that less than 10% of derivative players in last 4 years are really able to make money. So what it shows? It shows that don't try to get involved in all these type of short-term trading and quick money formula, because this is not going to earn money. What Mr. Warren Buffett is saying, that never forget rule number one, that is never try to lose money. And that is what is happening here. We all are getting involved in all these intraday derivatives, and that is where we start losing lot of money, and that is what you have to avoid, and start following long-term investing, where the chances are more than 70% that you will earn through this market. And that is what Mr. Warren Buffett used to say. Think like a business, think for the long term, and always remember, never forget rule number. Even Charlie Munger told that I should know where should I not go so that I'll not die there. And that is what I want to tell you guys. You should be aware what steps you have to follow and what investing styles you have to follow, because if you follow the wrong invest style, you are going to lose money in this market. Second is, the stock market is designed to transfer money from the active to the patient. This is what Mr. Warren Buffett is saying, that when you are investing in this market, you should not be doing investing every day, or like doing buying selling every day, because this is not you are going to earn money. Guys, I want to tell you one thing, if you are regular buying selling every day, no, your broker is going to earn, you are never going to earn money. If you really want to make it big, no, you have to stay long. And guys, understand, when you are investing in a stock, indirectly you are investing in a business. So if business one is going to grow, then only your stock is going to grow. And business is not growing within a span of 2 days, 5 days, 10 days, correct? It will take years together to grow. And that is what I'm trying to say. No, that is what Mr. Warren Buffett is saying, that you should be patient enough to understand that it will take time. It will take time to business to grow, and accordingly, please invest, stay for long, and give time to the business to grow. Indirectly, when the business start growing, your stock will grow. Like suppose you are investing in Infosys. Now, Infosys will take time to grow. Not tomorrow only it is going to get double. Over the years, it will regularly earn a good amount of money through profitability and everything. And then the stock price goes up, and then the profitability and stock price both goes up. So this is what you have to understand, that business will take time. Now let us go to the third principle, that is price what you pay, value is what you get. That is what normally Warren Buffett used to say, that you don't have to focus on the price. Sometimes what happens, the investor normally focus on the cheap prices. That suppose some stock is available at a very P ratio, it is quite undervalued compared to his competitors and everything. We think, okay, let us buy that stock. But understand, the stock is available at a lower valuation, at a lower price. That means something going wrong in the stock, and that is what you have to understand. If you are not able to judge that, no, then the stock may be there for at that level basically for years together. So understand price what you pay and value what you are going to get it. So you have to invest in a stock now where the growth is there. Of course, that stock will be having a higher P ratio and it will be attracting more valuation, but you should be ready to pay if you really want to grow in this market, and also if you want your stock to grow, because stock will grow only when the growth is going to come in future. A low P ratio stock or a low valuation stock is a place now where most of the investors do not want to go into that stock because that stock is not showing growth. Again, the fourth rule is that risk comes from not knowing what you are doing. Now, what it means to say that Warren Buffett wants to say here that you should not invest in a stock which you are not aware of it. Suppose like now everyone start to investing through recommendation and anything, and else someone gives you a stock and you just blindly invest in stock without thinking what is the risk and everything. And when you are not aware of that risk, guys, understand, if something goes wrong in that company, you are going to lose money. And if you are going to lose money, the person who is giving you a recommendation is not going to come back and give you money back. They is telling that, boss, because of my advice you lost money, so please take this money back. So risk is always involved when you are investing in a stock without doing any type of research. So please do not invest in a stock which you have not done any research. Again, also not invest in any sector in a stock which you're not aware of it, okay, which is not in your core competence. Fifth rule is nothing but the best investment you can make it is in yourself. That is what Warren Buffett always used to say, that invest in yourself, upgrade yourself. You have to be lifelong learner. You have to spend your amount in learning how to invest, what are the principles to be followed, and you have to invest in yourself because this is the best way how you can upgrade yourself. Guys, even I have spent lakhs of rupees on upgrading myself. Even I have lot many mentors, but this is where the things will get differentiated between a normal investor and a much more educated investor, because this is when you can take decision when to enter, exit, invest in a good quality stocks, how to see the macroeconomics, how to see the trends and everything. And guys, if you want to learn more, now we are having this workshop every week. You can click the link below and you can attend that workshop. It is almost 1500 rupees. We are giving it completely free. So do enroll to this workshop because it will be a very insightful. And again, before I go, if you're not still our subscriber, please click the below link and become our subscriber, because lot many informative videos related to market we are putting. Sixth rule is be fearful when others are greedy and greedy when others are fearful. Mr. Warren Buffett wants to say that you have to invest in a stock when there is a free fall, when there is a blood in the market, because this is where you have to take advantage of low prices. Normally what happens now, if the stock market fall, most of the retail investors literally got freeze, literally getting freeze that, let it fall it more, then only I will invest. Now this is where you have to keep in mind that you are not going to getting this type of price again and again. So keep this in mind. So whenever there is a fall in the market, you have to be greedy. And of course in India is going to grow a lot in next 10 to 15 years, guys. And if you want to really take an advantage whenever there is a free flow in the market, please invest in this market in a good quality stocks, of course doing research, because this is how you can make it big over the time. Again, before I go forward, I want you guys to put it in the comment box what type of problem you are facing in this market and what type of concern, and are you really following the rules of Warren Buffett which I have told you till now. Some of the rules still I am going to discuss, but yes, please type in the chat box because I always review your comments. Again, now seventh rule, it is far better to buy a wonderful company at a fair price than a fair company at a wonderful price. So guys, valuation plays a very big role. That is what Mr. Warren Buffett is saying, that if you're buying a stock at a much more wonderful price, at a much more upper level, you are not going to earn money. And this is where you have to be very careful. Valuation plays a big role, because if you are buying a company at a high valuation, guys, you are in a big problem. Because after that, if the stock price fell, if something goes wrong in a stock or something earning, you can say that the growth of the earning is going to be decreased in future, then also there will be a big fall. So valuation plays a big role. So before investing, you should be aware what type of valuation you are investing in this stock, and if the valuation is good, then only invest. Otherwise, please do not invest in stock, because otherwise you will be stuck at that level. Most of the problem with the retail investor faces, they never try to research a stock or never try to value a stock. They put all your hard-earned savings in the market, but They are not putting even 5% of efforts what they have given in the business or in the job in order to earn that saving. So this thing you always have to keep in mind. Do research and then only invest, and invest in a much comfortable valuation rather than a high valuation. Then eighth rule, never invest in a business which you cannot understand. Now this is what Mr. Warren Buffett always used to say कि जरूरी नहीं है कि you have should be aware of each and every company about what they are doing, what they are not doing. You should be careful in which company you are investing, and please don't invest in the company which you don't know, because see, there are 5,000 companies in NSE and BSE, correct? Now all these 5,000 companies you cannot evaluate one go. You can select 10 to 15 companies, and in that only you have to invest. So after doing a proper research, select any 10 to 15 stocks, and that only you invest. Because if you start investing in a stock where you cannot do a research, or which is out of your domain, suppose you are an IT professional, you are good in IT service and maybe 3-4 sector more, but if you are not good at a pharma sector, you can avoid that sector completely. So this is what you have to understand. You have to work on your strength, which sector you feel it is much better for you to investigate and invest in that stock. So please invest in that company and that sector only. Otherwise better not to invest, because if you start investing with a half-baked knowledge, guys, you're not going to earn a big money. Again, ninth rule, the most important rules in investing is margin of safety. Now this is completely correlated with the valuation. Whenever you are investing in this market, guys, your margin of safety should be there, because if the margin of safety is not there, you are not going to earn in the future. See, because if you are paying high price at a current level, in future it may happen that the stock may correct because of high valuation, and margin of safety plays a big role. Because if you are having investment in a particular stock with a margin of safety, someday maybe in 1 year, 2 year, 3 year, you will be rewarded with good return. So margin of safety plays a big role, and Warren Buffett was firm believer on that part, that yes, you should have a margin of safety, then only invest in that company. Now the 10th rule and last rule is nothing but, if you are not willing to own a stock for 10 years, you do not even think of owning for 10 minutes. This is a very true statement. Most of the people will run behind 5%, 10%, 15% return. They think that, okay, there will be a jump of 15, 20% in this stock, let me invest in. Guys, you don't have to invest like this. You have to invest for the long term, whether in next 3 years, whether this stock will be 2 times, 3 times or 4 times or not. This is how you have to think about it. And in next 5 years, 10 years, if this stock is going to grow, then only invest. Otherwise, don't invest in that stock. As I told you, you have to invest in the limited company. If you start running behind 5, 10, 20%, I can give you a guarantee you are never ever have a very good portfolio in your head. Because then your mindset will be working for the short time only. You are thinking that, okay, let me earn that 10, 15%. But by the time, if you go for the 10, 50%, if the stock gets correct, then you will be stuck with that stock. So keep this in mind. Whenever you invest, you think long. You have to keep your goals into picture, like in 10 years what you want to achieve, and in 10 years all the companies is not going to grow in a straight line. Some will be down, up, but over the time, if it is a 45-degree angle, you will be able to achieve your goals, correct? So keep that long-term goal in your mind, and I can assure you, if you have that type of long-term goal in your mind, the chances are that you are going to earn in this market much brighter compared to losing it. So keep this in mind. Always have a long-term mindset and think big. Don't just run behind 15, 20%. And guys, whoever is telling that invest for 5, 10%, no, you have to avoid their suggestions also, because they are trying to get their own benefit, but you are here to earn big. So keep this in mind. So guys, these are the 10 main principles and rules, you can say, that Warren Buffett has followed over the years. From at the age of 11 he started, now he's 93 plus, and he has earned more than 10 lakh crore of rupees by investing only, that is long-term investing. And guys, your chances are much more. If you see, most of the biggest billionaire in the world, they've created wealth through long-term investing. And this is what we have to learn from the history. This is what we have to learn from the gurus like Mr. Warren Buffett. Even I am learning a lot. So please keep this in mind, and if you're following these 10 principles, the surety is that you will have a great portfolio in it. So hope you like this video, and hope you like all the key principles we have discussed about. What do you think about Warren Buffett? What do you think about long-term investing? Do type in the chat box, and I am always reviewing your comments. And also do subscribe to our channel and like this video. So guys, I'll see you soon in the next video. Keep investing and stay for long term.